The European Central Bank just issued a warning we haven't heard in over a decade. A warning that Europe's banking system might be facing unprecedentedly high risks of shocks. Not because the banks look weak today, but because global conditions are shifting underneath them in a way most people don't understand. And here's the part that made me sit up. The ECB specifically highlighted the risk of a dollar fund squeeze, something that historically only happens right before liquidity crisis. This isn't crypto FUD, this isn't internet speculation. This is coming directly from the European Central Bank. And if this develops into what I think it could, it won't just hit banks, it won't just hit Europe, it will hit every market, stocks, currencies, and yes, crypto. So today we're diving into the warnings, the signs, the quiet cracks that could be forming in Europe's financial system. Because when central banks start sounding alarms like this, you pay attention. If you're new here, hi, I'm Paula. I break down the complicated parts of the financial system in a way that actually makes sense. No jargon, no fear-mongering, just clarity. Today we're going to dig deep into banking, liquidity, stablecoins, global funding markets, and the risks most retail investors aren't even aware of. Right, let's get into it. A lot of people saw the headline and kept scrolling. ECB warns Eurozone banks face unprecedented shock risk. But very few stopped to read why. The European Central Bank isn't worried because banks are failing today. They're worried because the environment banks operate in is shifting fast. Geopolitically, economically, structurally. And one line stood out to me more than anything else. Banks with large US dollar exposure need to increase their liquidity buffers immediately. Why? Because the ECB is worried about a dollar squeeze. And if you're thinking, what does that even mean? Good. That's what we're going to unpack. Because the last time the ECB warned about a dollar fund squeeze was during the 2011 sovereign debt crisis, and one that almost tore the euro apart. This warning is not normal. So here's the part that most people don't realise. European banks rely heavily on US dollars for international business, trade financing, commodity flows, corporate loans, and derivatives. Dollars run the global system. But when global liquidity gets tight, like it is right now, European banks struggle to access dollars cheaply. If it gets bad enough, they struggle to access dollars at all. That's a dollar funding squeeze. And when banks can't get the dollars they need, they have two choices. They can sell assets, which causes the markets to drop, or they can stop lending, which causes the economy to contract. Either option is ugly, and the ECB is warning that pressure is building. So let's zoom out. European banks have had a rough 15 years. Low interest rates, weak profitability, political fragmentation, slow growth, and a long list of over-leveraged borrowers. So even though banks appear stable on paper, their ability to absorb shocks is weaker than people think. And now you add global geopolitical stress, tighter liquidity, falling deposits, rising funding costs, dollar dependence, and pressure from stablecoins. And the foundation starts to tremble. Banks don't break instantly. They crack slowly at first, quietly, and then suddenly. That's why these warnings matter. This is the part that ties crypto directly into the traditional system. The ECB warned that stablecoins, especially large ones like USDT, could pull deposits away from European banks during stress. Let me explain this in simple terms. If Europeans lose trust in their banks, or if they expect a banking shock, what do you think they'll do with their money? They'll move it. And stablecoins give them a fast, portable, borderless alternative. The ECB is terrified of that because banks rely on deposits for funding. If stablecoins siphon off deposits during a crisis, banks could face liquidity issues at the worst possible moment. This isn't about whether stablecoins are good or bad. It's about money moving faster than the banking system can handle. And the ECB is openly acknowledging this for the first time. That's huge. So the question, is a crisis already brewing? Here's where things start to feel familiar. When central banks warn about something, it's usually not because the problem might happen. It's because the early signs are already there. And right now, the signs look like this. European banks are under pressure to raise liquidity. Dollar markets are tightening. The yen is strengthening, bond yields are rising, corporate defaults are creeping up, geopolitical tensions are stressing supply chains, and stablecoins are becoming a major player in global liquidity. That's the recipe for systematic strain. Not tomorrow, not this week, but soon if something triggers it. It might be a shock from Japan, a corporate debt wave, a geopolitical flashpoint, a dollar liquidity event, or a stablecoin disruption. Crises don't need a big spark. Sometimes they just need everything to be fragile at the same time. And that's what we're seeing. Now let's talk about the part you're probably wondering. How does this affect crypto? In a banking stress scenario, crypto becomes a liquidity outlet. Traders sell crypto to raise dollars. Stablecoins face more scrutiny. Risk assets drop. Fear rises and liquidity drains. This is why crypto sometimes crashes for no reason. Because the reason is happening in the traditional finance system, not Twitter. But this also creates opportunities. During banking stress, people look for alternatives, and stablecoin, Bitcoin, and self-custody becomes attractive options. This is where crypto often sees its biggest inflow after the liquidity shock finishes. It's the in-between period, the tightening phase, that gets messy. We might be entering that phase now. I don't want to give you a list of things to watch. I want to give you something more meaningful. Pay attention to the tone of central banks. Not what they say politely, but what they choose to warn about. Central banks don't issue warnings for fun. They warn when they're scared. And right now the ECB sounds uneasy. They're raising flags, they're telling banks to increase buffers, they're highlighting dollar exposure, they're acknowledging stablecoin risk. That's not normal rhetoric, that's preparation. So, is Europe hiding a banking crisis? Not today. Not in the sense of the banks collapsing overnight, but is Europe showing the early signs of structural stress, liquidity fragility, funding pressure, and vulnerabilities that could escalate with the wrong trigger? Absolutely. The ECB isn't warning about nothing. They're warning because the cracks are visible, and they want banks to reinforce the system before something gives. If you want to survive the next year in these markets, you have to understand the environment we're in. Liquidity is fragile. Banks are under pressure. Stablecoins are rising. And the global system is restless. We're in a transition, and transitions are always the most dangerous phase. So stay alert, stay informed, and stay ahead of the narrative. And if you want deeper breakdowns like this, hit like, hit subscribe, and remember to join the Crypto Wolf Pack because we're having discussions like this every single day. If you're interested in joining the pack, the link is in the description below. And if you want to understand how we make money in both the bull market and the bear market, we've made a completely free course for you. It's called the Crypto Liftoff course, and the link is in the description along with the link to the Wolf Pack. So let me know in the comments, do you think Europe is hiding a crisis? Or do you think the ECB is overreacting? I read every single one. Thank you so much for watching, and I'll see you on the next one.